What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to see volatility and tomorrow is quad witching. Will we see this market roll over or will we bounce from here and go back into a bull market? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did drop, going down 0.16%, and we did see another very volatile day. Now SPY is really easy to read right now. You're really just waiting to see is SPY going to break back above our 20 simple moving average, which we really need to see a decisive break back above about 449, or are we going to break down and close below our 50 EMA below 442 and possibly see the stock market roll over and go through a full-blown correction. So right now on SPY you really need to be patient. Unless you're trading off of support and resistance, there's no real decisive trend in SPY on the daily chart. We lost the bull trend and we definitely aren't even close to a bear trend. So the question is, are we coming back down to the 50 EMA as support, or are we already starting to bounce and we're about to break out and continue in this bull market and break back above that 20 simple moving average and start running to brand new all-time highs? So we're very close to knowing, but tomorrow is quad witching, so I don't expect to see a lack of volatility in tomorrow's trading session. So you still need to watch intraday support and resistance levels, but by far the most critical levels will be resistance at 449 and support at 442. And potentially we undershoot the 50 EMA a little bit and we find support at 441, and that would still be just fine. We still see really nice volume and we're seeing volume on the selling and the buying side, but we are still seeing a lot of downward pressure because we're still getting some high volume selling. The good news for the bulls is that high volume selling dries up and we do see a positive bounce from the middle of the trading day, but we still do see a downward trend forming on SPY. If I switch this over to the 1 hour chart, you can still see that we're potentially in a lower high, lower low situation, but we are starting to see a little bit of shift in this trend and we potentially just put in a higher low. Now we still need to break out and form that higher high, and that's why you need to watch the price action breaking out above 449. If we get that higher high and we do have that higher low, we can start building up a bullish trend yet again, and we could regain the bull trend and we could still see SPY breaking out to new all-time highs. But right now this could still just be lower highs and lower lows, which is obviously more of a consolidation pattern, and we could be stuck range bound until we get a decisive break in this market. So you still need to be patient and you still need to let the price action do all the talking, and there's no clear directional trend in this market at this time. You look at the chart, it's choppy, it's volatile, and we haven't had any decisive breaks for the bears or the bulls. So be patient and continue to watch the price action and watch those critical levels that I gave you. Jumping over to the NASDAQ 100 triple Qs, we were pretty flat on the day, only going up 0.07%. And we do see intraday, we did retest that support level down there around 375. We continue to close above the 20 simple moving average and we continue to hold on to the full bull trend, but it's still looking relatively weak in the triple Qs. Overall, as long as we're holding up above critical support and we have the bull trend, there's always going to be the possibility that we do break out above resistance and try to form another all-time high. So our resistance trend line is right around 381 and our resistance breakout is our all-time high just above 382. If we do get a confirmation breakout, it's very likely we're going to that next price target at 388. So look for the bullish breakout for that confirmation. To the downside, if we get a daily close below about 376, that will definitely look like the triple Qs are rolling over and we're very likely going to lose the bull trend. Remember, the triple Qs are the only index left that still do have a bull trend. We lost the bull trend on the Russell 2000, the Dow Jones, and the S&P 500. So the big tech companies are still propping up this market, but that doesn't mean they can't roll over and we lose the bull trend in the triple Qs. So do look for that confirmation breakdown of support. If we do see that price action, we will see the rest of the stock market looking a lot weaker as well. But for the time being, the triple Qs is still bullish until it's not. And at this time, you still have to remain bullish on the triple Qs until we lose a critical support level. If we do break and close below the 20 simple moving average, you really want to watch for support down here right around 372 to 370. And if we lose that, we're very likely coming to close that gap at 368. Remember, gaps typically get filled and it's not a matter of if, it's just a matter of when. And if we're losing the bull trend, it's very possible we're coming down to close that gap at 368. So don't forget about that critical support level. Jumping over to the 1 hour chart on the triple Qs, you can see that we're definitely starting to see a shift in the trend. We potentially put in a higher low and we're currently forming a higher high, but we still need to get a confirmation breakout above this neckline. Remember, we've been watching for this possible double bottom scenario, but to confirm we're breaking out of this double bottom, we do need to break above this neckline, which is right around 378.5. As you can tell, that's a strong resistance, and we haven't had a confirmation breakout above that level. So if we break out above this level, you have a really nice long trade to 382. And if we get rejected at this level, it could be a nice short trade back to 374. Now, if we do get rejected at resistance, it's always possible we put in another higher low and then we make another attempt to break out, and then we get the confirmation of the breakout. So look for these scenarios, and you really don't know which one's going to play out. So you need to watch the price action and you need to be objective. If we're getting rejected at resistance, you could try to short the triple Qs. But if we're breaking out above this level, you don't want to be bearish. You actually want to start looking for a bullish trade to about 382. So there's 3 scenarios that can play out tomorrow. You just need to watch the price action and let the price action tell you which direction you need to make the trade. This is going to be a profitable trade no matter how you took it. And if you took the rejection of resistance, you had a really nice short trade today that basically took you right down to our support level. So let the price action dictate how you're going to trade this market and continue to remain objective. On the Dow Jones, we were down 0.18% today, and we now have the Dow Jones closing 6 days in a row below the 50 EMA and closing below all the moving averages, so we still do have bearish price action in the Dow Jones. We're building up bearish momentum, and if we get that 20 simple moving average crossing below the 50 EMA, it will look like the Dow Jones is going into a bear market. Watch support levels at 348 and 346, and below that, we could be coming all the way down to about 341.7. Upside resistance is the 350 to 351 level, and we really need price action breaking back above about 352 to break out of the downward bearish momentum and try to get the Dow Jones going back into a bull market. So for the time being, the Dow Jones still looks weak, and it does look like it could go for another leg lower. Watch the price action and watch these critical support levels, or look for the breakout back above about 352 to possibly see the Dow Jones going back into a bull market. On the Russell 2000, we were pretty flat today, only going up 0.07% and printing a very volatile looking doji candle. We're still closing below all the moving averages, and we're still developing some bearish trending, and we still have a huge gap below at 216 that has yet to be filled. If we lose the support level at 219, look for that gap to fill at 216. Otherwise, look for a break of resistance back above 224 to potentially run to 227. There's no trend for the bears or the bulls, and this is a very choppy sideways market in the Russell 2000, and it is still very possible we close this gap below. So look for that breakout to the downside or that breakout to the upside, and your critical levels will be resistance at 224 and support at 219. On the Arkk ETF, we were up 0.64% today, and we still see Arkk closing below all the moving averages, so we still do have bearish price action. If I zoom in here, you can see we're very close to having the full bear trend once that 20 simple moving average goes negative and crosses below the 50 EMA. So if Arkk cannot close back above 121 in the very near future, it's in jeopardy of going into a full-blown bear market, which could take it all the way back to about 109 or 106. We would need to break that critical support level right around 113 or 112 to get down to those levels, so watch those critical support levels. If we can break back above 121, we could lose the bearish trending, and we could reattempt to break out above resistance at 123 and 125.7. On the VIX, we were up 2.8% today, and we do see the VIX holding on to that full bull trend, and we do see the VIX holding up above that support level at 18.2. This is by far the biggest warning sign going into quad witching, is that we still have a bull market in volatility, and we're about to see one of the most volatile events of the season. So this is one of those days going into quad witching where there's a huge amount of options expiring, and there's a lot of money moving around getting ready for the next quarter, and we do see a little bit of a bull market in the VIX here. So if you see the VIX spiking out above 21, you could possibly see a full-blown stock market correction if we see the VIX closing above 23. However, if you see volatility staying under our resistance trend line and we never see the VIX breaking out above 21, it's still just likely a pullback, and we're getting ready to go back into a bull market. And then we'll see the VIX getting crushed all the way back down to our support trend line around 16. So the VIX below 18.2 is bullish for the stock market, and the VIX breaking out above 21 will be bearish for the stock market, and it could tell us to look out for a full-blown stock market correction. On Bitcoin, we're currently down about 1.35%, and we see Bitcoin still hanging around that support level at the 20 simple moving average just below 48,000. Remember, as long as Bitcoin is holding up above critical support at 45,000 and 43,000, it's very likely it's still bullish and it's still going to attempt to break out. We need to break out above about 53,000 to go to brand new all-time highs, and we will have pretty strong resistance around 58,000. To the downside, if we lose support at 37,000, we could see Bitcoin rolling over and we could come back down to retest support at 30,000. So for the time being, Bitcoin still looks bullish above the support level, and we could see Bitcoin regaining the full bull trend if we can continue to get some solid closes above 48,000. On Amazon stock, we were up 0.36% today, and we do see Amazon getting very close to testing that resistance level at 3,500. Look for strong resistance at 3,500 and 3,552. And if we break out above 35.52, look for the gap close at 35.80. To the downside, we do have the strong support level right around 34.21. And below that, we do have support at 3,400 and 33.11. We're very close to having the full bull trend. So if Amazon can stay above 3,400 until that 20 simple moving average crosses above the 50 EMA, we could have a full blown bull market that takes Amazon all the way back up into the 3,700s. So look for that confirmation breakout of the full bull trend and the breakout above critical resistance at 35.52. On Tesla stock, we were up 0.15% today, and we see Tesla stock closing right at that resistance trendline level at 759. We still have the very strong trend, which is still full bull, with all the moving averages still stacked to the bull side, and we're still well above critical support at 728. We have a support level at 732 as well, and if we can break out above 765, we could run to our next price target at $800. As long as we have the full bull trend and we're trading above our 20 simple moving average, it's very likely that Tesla is going to attempt to run to that next price target. If we get rejected at resistance, watch for these critical support levels to hold up, and we really need to see Tesla staying above about 706 to remain bullish. If we start closing below 692, we could lose the bull market and we could see Tesla rolling over. On Apple stock, we were down 0.16% today, and we still see Apple closing above our support trendline while we continue to lose some bullish momentum. So if we see Apple taking out critical support at 147 and closing below 145, we could easily close the gap at 137. But for the time being, the price action is staying above the 50 EMA, so we need to see Apple breaking back above 151 to try to regain the bullish trend. There's no guarantee Apple has to go any higher, and we already did reach our price target, so it is fully possible that Apple is getting ready to go through a full-blown correction. Look for that breakdown of support or the breakout above 151, and if we break 157, your next price target will be 162. I don't think we have to get to 162, so wait for that confirmation breakout above 157 before you even consider that possibility. On the financial sector, we were down 0.29% today, and we still see the financial sector looking weak, but we still see price action above the 50 EMA. A loss of the 50 EMA of support, we could close the gap, which would confirm the double top, and we could be going much lower. On the industrials, we were down 0.7%, and we still see the price action well below all the moving averages, and we're very close to having the full bear trend, which will mean the industrials are going into a bear market. A bear market in the industrials will put downward pressure on the Dow Jones as well as the S&P 500. The healthcare sector was down about 0.25% today, with price action still hanging over the 50 EMA. The Bollinger Bands are expanding and all the moving averages are negatively sloping. So if the healthcare sector loses the 50 EMA as support, we could see the healthcare sector also going into a bear market. You need to see the price action back above the 20 simple moving average to regain the bull trend. The energy sector was down 1.13% today, and the price action did close above the 50 EMA, and we are starting to develop some bullish trending. The longer the energy sector can stay above the 50 EMA, the more likely it can go back into a bull market. So jumping back over to the S&P 500, you can definitely see plenty of warning signs in the stock market with the bull market in the VIX, and it could potentially break out. And we are seeing a lot of weakness in the sectors like healthcare, financials, and industrials. If we see the tech sector rolling over and we lose the bull trend in the NASDAQ 100, we're very likely going to see a full-blown stock market correction. So watch the price action at those critical support levels and continue to remain objective. For the time being, we are still in downtrends until we're not, so you still want to protect yourself to the downside until we can get a confirmation breakout above these critical resistance levels. Remember, we're still in a very volatile month in the month of September, which is typically very bearish, and we do have quad witching tomorrow. So you still want to be defensive and you still want to be patient because there is still plenty of downside possible in this market if we lose critical support. Don't forget, I also have my own trade alert service that only trades TQQQs called BANC Trade Alerts, and it does exceptionally well in volatile markets. And I am currently running a 50% off promotion code for your first month, so now could be the best time to try BANC Trade Alerts. You can find out all the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.